Hello everyone, thanks for joining us this morning and welcome to this educational presentation of how to fine-tune your entries with the confirmation method. Now this is a great technique that I was taught years ago on the floor of the exchange. I'm sure many of you may have heard of it already, but surprisingly most people do not apply this. I'm going to show you how simple it is and how you can start applying it as early as Monday. Now for example, I'd like you to take a look at this chart right here, this generic chart. With this technique, had you decided to buy right here, well, it would have turned out into a major loss. But with the confirmation method, you actually would not have lost anything in the same example. So in a few minutes, I'll show you how you would have applied it and how it would have kept you out of trouble. Now, this is a really simple and easy technique to apply. And we just took it one step simpler by putting it as a new feature on our new PTS Primo Charting Platform. So it's as easy as one click away and you'll automatically see the confirmation method applied to your chart. So this is the trading educational portal that makes trading simple, our new PTS Primo Charting Platform. So welcome once again. Thanks for joining us this Saturday morning. My name is Steven Primo. I'm the president and founder of Specialist Trading. I teamed up with Pro Trader Strategies 9 years ago with one goal in mind, and that's simply to provide education to traders. And someone would say, well, why do you just focus on education? Because that, in my 41 years of trading, is the one thing that we found is really missing from most traders' agenda. You see, most traders do the same thing that I did 41 years ago. You'll study a lot of stuff, you read a lot of books, you go to seminars or webinars, but ultimately you'll give your power away by buying some $10,000 system that's supposed to spit out buy and sell orders for you, or by going to a chat room and listening to someone tell you what to buy or sell, or by waiting for some news event to come out in order for you to decide whether you should be buying or selling, or lastly, by looking at some so-called trading guru on TV. You see, that's the way 99.9% of all traders trade and make their entry decisions. Now think of it. Do a little self-discovery right here and think of how you make your own entry decisions. Is it based off of someone or something else? Well, if it is, don't worry, because that's what the majority of traders do. Unfortunately, it has been estimated that 80 to 85% of all traders fail. Do you think this may have something to do with it? Well, I think so. Now, I've been trading for 41 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. So that's where we get the name specialist trading. A specialist was someone who specialized in making markets. So if you wanted to buy or sell a particular stock, such as IBM or US Air or Waste Management or Beverly Products, you had to go up to the trader who specialized, who made a market in those. So that's what I did during the crash of 1987 and the bull market that followed. I traded through straight up, straight down markets. In fact, every system or every technique that you can think of, I've probably already traded it. All right. So in my over 4 decades of experience, I know what works in terms of consistency and I know what doesn't. So I'm here to shorten your learning curve. Why waste your time and your energy exploring and wasting a lot of time, energy, and most notably money on things that really have no consistency? We're here to teach you the things that have shown through time that have stood up and that still continue to work in terms of consistency today. So if that's what we do at Specialist Trading, we provide you with the tips, the techniques, and the strategies in order to elevate your trading so that you can become a consistent trader and ultimately make your own trading decisions. You see, that is the kiss of death as a trader, to rely on someone or something else to trade for you. It really is a recipe for disaster. That's why most traders fail. But we provide you with the information so that you can ultimately leave and not have to, come to our website every day and find out what to do the way other websites do. We want you to ultimately go on your own and trade for your own account. That's what we believe will make you a consistent trader. Now, I'm going to show you this technique, which is extremely simple today, and show you how easy it is to apply on a new platform. But before we begin, we are required by law to share this with you, so please take a moment to view our disclaimer. I am going to share with you a lot of examples using this method today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And please remember that all examples I'm about to share with you are strictly for educational purposes only, okay? Now, as you're taking a brief moment to view our disclaimer, I would also like to take this time to invite each and every one of you, if you haven't done so already, to follow us on Twitter. Every day I post information and educational tips and techniques in order to elevate your trading, anywhere from signals that our strategies have generated to little bits of financial wisdom. So lots of great free education. Feel free to follow us on Twitter. Now, as I stated in the very beginning statement of today's presentation, we are an educational company. We're a little bit different from other webinars you may have gone to, where I'm not going to sit here and tell you what the perfect market to trade is. I'm not going to tell you what the perfect time frame is. I'm not going to tell you what our buy of next week is going to be. We don't believe in that. We think that you should be making that decision, not us. We simply provide you with the information in order to elevate your own trading. So as you see here, my goal is not to force feed you signals. My goal is not to tell you all these different systematic ways of trading or ways in which to trade different time frames. Don't believe in that. My goal is simply to teach you how to trade with the specialist edge. Now, when I was struggling some 4 decades ago, these are the same things that were taught to me. And I believe these are the things that have sustained me going on 4 decades now. So hopefully they will be able to do the same for you. Now, this is going to be an educational presentation. I'm going to show you a lot of slides. But as always, I want to take your questions. But if we're like other presenters where we stop for every slide, we may be here a good 2 hours. I don't want to take all of your time up for your Saturday morning. I know you took time out to join me this morning. So please, if you have a question, write it down and try to remember it, and wait till the very end of today's class. Probably won't be longer than 20 or 30 minutes. And then we'll reserve the remaining portion for any questions you have, okay? So we have a good crowd here today on a Saturday morning. If you happen to join us late, please wait to the end of today's class to ask any questions. I will only answer one question right now. That's the most popular one, and that is this being recorded? Yes, it is. We record all of our webinars. So if you have to leave early, or if you're having technical difficulties, many times it's your own internet connection. If you just log off and log back on, it'll be corrected. But if you can't fix the problems you're having, don't worry. We will send each and every one of you a link to this recording. All right? So let's begin. All right, now we're going to talk about what I learned trading on the floor of the exchange. Because believe it or not, my first year or two, I struggled tremendously. And I know a lot of you are saying, well, wait a minute, you've been trading for 41 years now. How could you struggle? Well, I had been taught the exact same things that probably most of you have been taught. All right. I was supposed to rely on what the news events were. I looked at all the earnings of all the stocks I was making markets in, and I relied on what the earnings reports were going to be. We didn't have the internet then, going back to the 70s and 80s, but what we did have were newsletters. So I subscribed to all the trading gurus. Okay. I listened to what they were telling me. So I was basically making all of my decisions, just as I had said earlier, on outside sources, waiting for someone or something to tell me what to do. And my mentors, who were specialists themselves, they had been trading on the floor they had over 100 years experience of trading individually or together, I should say, if you put them together. They saw how much I was struggling. They felt bad for me, I guess, because I was a new specialist. And they studied what I was doing, and they said, Steve, you're doing just about the same thing 99.9% of all traders do. And I said, what am I doing wrong? And they said, well, it's not so much that you're doing something wrong. It's that your entries are faulty. And I said, what do you mean my entries are faulty? And they said, well, you may have a right idea. It may be right to buy the stock or to sell the stock. But it's just your entry may be timed poorly, or you're basing it on the wrong things. And they asked me, I said, what are you basing this entry on that you bought and lost money on? I said, well, the earnings reports came out, and the estimations were at a certain level, and they did not meet the estimation. So I sold it and shorted it into customers. And they said, okay, and what else do you make your entries based off? I said, well, I follow this trading guru. I subscribe to his newsletter, and he likes this other stock. So I bought this because he said, once it breaks out of this resistance and once the institutions start buying, then it's really going to go up, which is what has happened. And they said, well, is it going up? And I said, no, it's not. So they said, Steve, this is the problem. You need a clear-cut plan for entry that's based on what the chart in front of you is telling you and not what an outside source is telling you. You see, all of my decisions were based off either an outside source such as earnings, an outside source such as a trading guru, an outside source such as support and resistance with a lot of institutions, what they were doing. But they weren't based on the source, which is what I was trading, the chart right in front of me. So they said, you have to base it off that. What is the chart telling you? Is the chart telling you that it wants to go higher? Is it telling you it wants to go lower? Because that's the only thing you should be listening to. Why overcomplicate your trading with what they called this useless noise that makes absolutely no difference? And I was spending a lot of time and effort and some money paying for these subscriptions and going to these seminars. And they said, it's silly. You're wasting your time and your money when it's right there in front of you. It was a very difficult concept for me to grasp because I had always been taught that's not what you're supposed to do. And they said, well, if you want to hold on to that, that's fine. But ask yourself, how's it working for you? And then I looked at my P&L, my profit and loss statements, and it wasn't working for me. So they said, you know, if that doesn't convince you, then I don't know what will. So I finally gave in. I said, okay, how do I listen to the chart in front of me? What's it telling me? And this is what they taught me. This was the confirmation method. And the confirmation method, let me state right off bat, is not a strategy. It's not a system. It's not a trading method. It's a method for entry that you can apply to any strategy, any system, any trading technique you like. And guess what? This method can be altered. I'm going to show you a certain way, which is the benchmark way to use it, but you can also change it. Later on, when I show you some current examples, things that happened within the last couple of weeks, you'll see how we changed the confirmation method to meet the needs of this particular strategy. So let me just say that right off the bat. This is not a strategy. This is where most students have difficulty, and they think that, well, Steve, the confirmation method gave me a buy signal. Well, it cannot generate a buy signal because it's only an entry technique. Your strategy or your method has to generate the buy signal. Then you apply the confirmation method. All right, so what do we define the confirmation as? Well, it's a method that is a verification that the trend has resumed in the desired direction. This is your signal to enter the trade. A specialist always waits for his trade to be confirmed before entry. Now, I know this may seem a little wordy, and it's actually going to get a little bit more complicated when I go over the individual buy and sell rules, but let me explain it this way. Imagine you were at a train station. You're in the middle of nowhere, okay? Let's say you're in the middle of the desert, and you're just kind of waiting there like a scene out of the movies where you're just sitting there waiting at the train station. There's no one around you, and you want to get from point A to point B. You want to go home, so you're waiting for a train to take you in that direction. Now, all of a sudden, you look down the tracks and you see a train coming towards the station. But guess what? It's headed in the opposite direction of where you want to go. Are you going to get on that train? No, because it's going in the opposite direction. But guess what? This is the way 99.9% of all traders trade. When a stock is going down or a future or currency pair, that's when they buy. All right, or when it's going up, when it's going straight up, that's when they sell. You're getting on a train that's going the opposite direction. Now, confirmation method is the opposite. Let's go back to the metaphor of waiting at the train station. You're waiting there in the middle of the desert, waiting for your train to come, and all of a sudden you see a train coming down the tracks about 2 miles away, and guess what? It's headed in the right direction, the direction you want to go. So that's going to be the train you jump on, okay? That's going to be the one you want to ride. That's what the confirmation method is. We want to confirm, it's the verification that the trend has resumed in our desired direction. All right, so how exactly do we do this? Here are the rules for buys. And remember, you can apply this to any strategy, any technique, any method. And on top of that, you can alter it as well. So even though these are the benchmark rules, you don't have to stick with this. Remember, we're giving you education. Education is meant to be used and applied differently. Education is not a system where everyone has to use it the same way. It's meant to be used and applied to meet your needs. Everyone has a different need as a trader. Some people like to have a lot of risk. Others don't like any risk at all. So you can mold and alter techniques and methods to meet your needs. This is what we promote. This is what we encourage in our students. We do not encourage a, one way is the only way type of trading. That's silly. That's why most traders fail. All right, so let's say your strategy gives you a buy signal. After an entry signal has been given, rather than buy the market or place a limit order lower or, wait and see what it's going to do, only buy once price trades 1 to 2 ticks above the original entry bar. If the entry does not take place on the second bar, then you have a choice. You may continue this process with each preceding bar. So in other words, you can continue lowering your entry point on top of the previous bar, as long as the setup is still valid. In other words, as long as you still want to go long within the strategy, or until you finally get filled. Now let me share with you a generic example of showing you how simple this is. All right, this is the way most traders trade. Let's say you see this and it's taking off. You're waiting for this little consolidation to end, and then it just takes off. And then you say, oh my goodness, the chat room I go to follows the institutions, and this $10,000 course I took says that the institutions are buying. It just broke out of major resistance. We've got to buy this, right? Did you notice how all of my decision process was based on an outside source? What they were telling me what to do based on what their actions were. It wasn't based on what the chart was telling me. What's the chart telling me? Well, the chart telling me it looks like it wants to go higher, but using the confirmation method, we want to confirm, because this can happen. Now, what if we had just jumped in and bought, all excited because the institutions were buying or resistance had been broken, and then this happened after we bought? Well, we would have been upset. We probably would have sold and lost some money and said, oh man, I just wasted a lot of money on this course. It doesn't work. But if maybe you're not wrong in wanting to buy this, it's just that your entry was faulty. Had we used the confirmation method, we would have waited for price to trade 1 or 2 ticks above here. Now, it didn't trade there on the next bar, so we have the option to continue to follow it. As long as we feel that this is a buy, and our strategy says it's okay to buy, we can continue to track this all the way down until ultimately we either decide we don't want to buy this anymore, it doesn't meet our strategy requirements, or you get filled, which we did right here. And you would have entered on this confirmation that you traded 1 to 2 ticks above the previous bar's high. That's your confirmation that the train is leaving the station. You jump on board, and though it's not guaranteed, the odds have now been put in your favor that now was the right time to enter, because now it's going to go higher. See how simple this technique was? Now, did this mean that your strategy or your method was faulty? No, it was actually right to buy. The thing was that you entered a little bit too early. You got all excited because resistance had been broken, because that $10,000 class you took said to buy. And then when it didn't happen right away, you scared yourself. You got a little nervous and you said, I can't take another big loss like this. So you got out. When had you only used the confirmation method, you actually would have been in this trade and you would have done okay. Let's look and see how we can reverse this now to go short with the sell rules. Remember, once again, the confirmation method is simply that. It's an entry technique. It's a method designed to fine-tune your entries. It is not a strategy. So I don't want you to think if you look at some chart and just start putting lines above that and say, okay, well, I guess I just buy once it goes above that. That's silly. That's like just basically throwing a dart at the Wall Street Journal. You have to have some structure. You have to have an idea or some type of method that has a bunch of requirements that tell you it's okay to buy and okay to sell once these requirements are met. The confirmation method is just one of the pieces of the puzzle, but it is not a full-fledged strategy. All right, so let's say your strategy, your technique, whatever it is, I don't care if it's one of my strategies or one of yours, something you purchased somewhere else, it makes no difference. Let's say it generates a sell signal. Rather than simply jump in at the market, or rather than just simply place a limit order somewhere, after an entry signal has been generated, only sell once price trades 1 to 2 ticks below the original entry bar. Okay, now I know a lot of you say, well, Steve, I don't go short stocks. I like to buy puts. Okay, remember, what is the source? What are you trading? You're trading the movement of the stock. You're not trading the option. The option is the vehicle you use to bet on what you think the stock's going to do. All right? So if the stock trades 1 or 2 ticks below, that's your key to purchase the put, or whatever means that you want to get into the trade. So even if you're trading options, you must wait for price to trade 1 or 2 ticks below, not for the put. Excuse me, let me just hang up that phone real quick and I'll just make sure it ends. I apologize for that. Every once in a while, I do have phone calls, and I forget to unplug my phone. So let's get back to the confirmation method. So it makes no difference if you are selling or if you're buying, if you're trading options or stock. The point is you need to wait for the stock to trade 1 or 2 ticks below or 1 or 2 ticks above in order for you to jump in. Okay? That's all that matters. So if entry does not take place, let's say it doesn't happen on the next bar or two, all right? You may continue this process. It's up to you. You may say, well, you know, I still feel my strategy and everything still says that this is going down. So I'll continue to monitor this with each preceding bar. Now remember, this is up to you as long as the setup is still valid within your strategy or until you're filled. So let me show you another generic example here. As you see, this market was going higher, and then all of a sudden it falls out of bed. And let's say it, the volume picks up, or let's say that chat room you love to go to says this thing is going straight down. You have to get out of this. So you just get all excited. It's got you all excited thinking you're going to make a ton of money. So you jump in at the market, and then look what happens. It goes up a little bit. You scare yourself. You stop yourself out, right? Let's see how the confirmation method could have helped us, because maybe you actually weren't right. I mean, you should say maybe you actually weren't wrong. Maybe you actually were right, and it is going to go lower. Your faulty point is in your entry, not in your strategy. So if we applied the method right here, here's where you would have gotten in, or I should say where you would have placed the order to get in, but it would have never been filled. So you would simply move it on to the next one and to the next one, until you tell yourself, well, listen, you know what? My requirements are not being met anymore. I don't think this is a short anymore. Or if your strategy is still saying it's okay to be short, all you have to do is simply continue to track it. And ultimately, you were filled by confirmation method. And look what happened. The train left the station. You see, that was the train coming in, going in your direction, trading 1 tick below, and telling you it's okay to jump on board. Once again, is this a guaranteed way of always having a profitable entry? No, it doesn't work all the time. Remember, we're here to teach you and to provide you with tools and techniques and tips that are highly consistent. Consistency, as I say in almost every presentation, means a 2-step forward, 1-step back approach, meaning that you will have losses from time to time, and that's okay as long as your technique or method, whatever it is, whatever piece of the puzzle it is, has a high level of consistency. You'll be able to recoup sometimes those losses. So that's what we want. We want something that puts the odds a little bit more in our favor. It's not going to be guaranteed that everyone is going to be a winner. So I don't want you to have that thought right now that, wow, this is amazing, I'll never lose again. That doesn't work like that. Now, there's another advantage to using the confirmation method, believe it or not, because the purpose of waiting for confirmation is not only to get us in at the beginning of a trend, in other words, to get us in once the train has left the station, but it's also to keep us out of bad trades as well. Now remember that first example I shared with you at the beginning of the presentation? You decided to buy, let's say this was so oversold, the chat room you go to says, you got to buy this. The indicators have never been this oversold before. So you jump in and say, I'm buying, but you're buying without confirmation, because if you were, you would have waited for price to trade 1 tick above right here. Now remember, the purpose of confirmation is not only to get us in once the trend has been established in the direction we want to trade, but also to keep us out of trouble, because had we simply bought without confirmation, look what happened. But if we applied confirmation all the way down, we never would have gotten into this trade. And most likely at this point, you would have said, you know what, I don't think this is a buy anymore. I'm not even going to try and buy this. So with using the confirmation method, you never would have had confirmation to buy. So once again, not guaranteed, but many times the confirmation method will keep you out of bad trades. So some of the best trades, as we've often heard, are the ones we've never taken. Now, remember, extremely important points to remember. This is an entry technique only. Remember, there are certain pieces of the puzzle you need in order to trade. This is what you need to have a strategy. You need entries, you need exits, you need stop placement, you need money management, you need a host of different things. This is just one piece of the puzzle, so please do not think that this is a trading strategy. It's probably the biggest problem I have with sharing with my new students this confirmation method. Another important thing is that it can be altered to meet your strategy. Now, some of our strategies that we have at Specialist Trading and Pro Trader Strategies are pullback strategies. That means you're waiting in an overall uptrend for price to sell off or pull back. Now, when we're using this with pullback strategies, we continue to monitor and lower our level down with each preceding bar. But guess what? We have other strategies as well, which are momentum-based strategies, which use the confirmation method for one bar only. In other words, you have to purchase on the next bar with the confirmation method. If it doesn't happen, then this entire setup is negated. Why? Because we're looking to capture quick momentum. And if that momentum doesn't happen within the next 1 or 2 bars, then it's over. It's not going to happen because it's based on entirely different requirements. So I'm going to show you in just a few seconds one of our strategies that uses the confirmation method in an entirely different way. We only use it for one bar. That's the next bar, and then that's it. So it doesn't track all the way down. Is this better than the other one? No, it's up to you. Some of our students will say, Steve, you know, with this particular strategy, the confirmation method is only used on the next bar. But sometimes with the market and the time frame I trade, if I track it down, sometimes I get some really nice entries. I said, well, that's fine then. Go ahead. As long as you're not bringing in something that we don't talk or teach, we encourage you to do this. I want you to make your own decisions and to explore with what we teach you. Remember, we do not teach nor do we trade systems. There's actually no, there's no real experience that I've had that has shown that systematic trading really works over time. Most of the systems I've traded, and believe me, I've traded systems and I've taught systems. Trust me, they've all eventually blown up. So I would rather be a part of the process than have a method or a technique that goes back and has 10, 20 years of fantastic statistics and then blow up the minute I start trading it. I'm sure some of you have gone through that yourself. Now, our goal here is not to guarantee that you're going to win on every trade, but it's to increase our odds for a successful trade. Remember, there's no guarantee for winning trades in any technique or any method. So the only thing we can try and do is try and put a little favor on our side. And that's what the confirmation technique and confirmation method does for us. All right, so let's look at some strategy number 4, confirmation method examples. Now, I'm not going to share with you. A lot of times I'll talk about a couple of the rules of the strategy. We're not even going to be talking about the rules. The only one rule I will tell you is that the confirmation method, as I stated earlier, can only be used on the next bar. We're not going to track it down 4, 5, 6 bars. No, if it doesn't happen on the next bar, we're out. And I'll show you how that helps us with this particular method. And I'll show you how simple it is on our new platform, because guess what? We've automized it for you. So you don't have to write some line there with your drawing tool, or don't have to kind of remember, okay, where's 1 or 2 ticks above? It's automatically done for you. This is a new feature I designed with Pro Trader Strategies that makes it simple for you. Okay, we're looking at an example here in FOSL. That's First Solar, okay? Now here are 2 buy signals. They're strategy number 4, buy signals, all right? Now strategy number 4 uses the confirmation method. It's one of the ways in which you can enter. But let's say, you want to use our new feature. It's as simple as clicking on the strategy number 4 green strategy tab on our platform. You'll see the drop-down menu and you hit confirmation. Now this is going to come up even before you enter the trade. This is where you can decide if you want to buy this or not. You can decide, well, if my entry is here, then you can decide where your stop is going to be. You can see how much you're going to risk. If it doesn't work for you, then you can go to the next example, okay, next setup. Now here we see that the original entry was right here at 20.67, I believe. So remember, you have to get long on the very next bar, and we never traded above there. But guess what? This next bar produced another buy signal at 20.57. So we can now use this as our entry. At 20.57, we saved 10 cents, and look what happened. The train left the station. Now, had we decided to jump in and then seen 3 or 4 days of down movement, we would have gotten scared. But waiting for confirmation, remember, does not guarantee that we're going to get the lowest price. That's not its job. That's not its requirement to get you in at the lowest or get you out at the highest. Its only job is to really get you in once the trend has resumed so that you don't have to wait around for 4 or 5 days thinking, God, did I make the right decision here? Should I have got long? Nothing has happened yet and I'm losing money. We don't want you to go through that because that's like the worst feeling for a trader. The best feeling for a trader is the minute you get into a trade, you start to have a profit. That's the best feeling you can have because you know you made the right decision. That's the beauty of the confirmation method. Here's another example on when. All right, here is a sell signal. All right, now, before we decide to actually go short, maybe we want to buy the puts, let's see what the confirmation method entry would be. Simply click on strategy 4, the drop-down menu appears, click on confirmation, and you'll automatically see that you should be going short at 151.96. Or you could put an alert on there, and the minute it trades there, well, you buy the puts, regardless of what the price is, because that's the right place to be getting in. So it's up to you how you decide to trade, but that would have been your entry, and the train left the station. Now, most likely you would not have entered there because we gapped lower, but that's okay. Look what happened when we opened. Did we ever go higher than where you would have entered? No. That's the beauty of the confirmation method. Not guaranteed, but many times your entry price will be the lowest or the highest price, depending on if you're going long or short. And that's a great feeling. Let's look at MEDP. All right, this stock is basically going sideways, but in mid-July, we got a buy signal. All right, so it's, you know, a $40 stock. It's not that expensive, but we're thinking, well, you know, depending on where I place my stop, where would I enter? Well, here's the confirmation method at 44.83. Maybe you want to place your stop down here, maybe just below the short-term pivot low. It's up to you. Whatever, if it meets your needs, you would have entered on the very next bar because the confirmation method using or applied with strategy number 4 tells you that you can only use it on the very next bar. So you're long at 44.83. And took a little while, but ultimately you had a nice 20-point gain in this stock. Now this is how the confirmation method can keep you out of trouble. Here are 3 sell signals in INTC, okay? Looking at this one, we have a short at 49.43. Now someone could have said, well, Steve, I think this is really going down. I'm just going to sell at the market. I'm just going to buy puts. Well, had you done that, how would that have worked for you? You would have lost money. And then there was another one right here. Well, even though it went up and then back down, it still didn't go much lower. You still would have lost money. Remember, on strategy 4, we only use this on the very next bar. So the next bar never traded there on both these examples until we got to the 3rd setup right here, which was at the end of July, and right here at 52.07. We would have entered. Now, where students have trouble is they say, but Steve, it didn't close below there. I thought it has to close below there. The basic confirmation method states that it only has to trade there. Now, if you want to wait for it to close, it's up to you, but you may miss a good entry point. In this example, you would not because it went lower and then closed all the way higher. But ultimately, look what happened. So this is how the confirmation method could have gotten you into this good trade and kept you out of these bad ones right here. How about the QQQs? Okay, here's a perfect pullback strategy number 4 trade. Now, you could have used this all the way down, pulling back if your strategy, but you would have entered maybe here and then got stopped out. Strategy 4 waited to generate a signal right here. We used the confirmation method. You got along at 171.78. Off to the races. The train leaves the station. This is what you want as a trader. You want to see things moving in your direction right away. You don't want to do like some traders do and say buy here or here, and then see 3 or 4 or 5 days going against you. Here's another example to go short in IBM. Okay, the stock was going higher and higher. A sell signal was generated here at 146.29. You would have entered the next day, and look what happened. You would have entered, and we closed lower. So automatically, the first day you're in, you have a profit. Now, it's up to you. You may have wanted to get out with a nice point or two, or stayed in longer for a really nice profit. But you see how the train left the station in your desired direction. All right, so let's review. Listen only to what the stock is telling you. Don't do what I did some 41 years ago and what is still being taught today. And that is, make your decisions based off the earnings. Make your decisions based off what some trading guru was telling you in a chat room. Make your decisions based off what the institutions are telling you. Make your decisions based off support and resistance breakouts. Trust me, they didn't work for me 41 years ago. I don't think they're going to change tomorrow and start working all of a sudden and start kicking in. So if you're looking for consistency, sure, those things will work every once in a while, but there's no consistency in them. If you listen to the market and let the market decide when you're going to get in, you will have a higher level of consistency. The way you do that is to buy above the previous bar's high and to sell below the previous bar's low. Now, the confirmation method as an extra added advantage can keep you out of losses as well. Remember, this is not a strategy. You can alter it to meet your needs. It's an entry technique only. You can alter it to continue to track each bar down, or you can say, I'm only going to use it for the next bar only, or you can use it for 2 bars only. Experiment with it. See what works for you. We have students that have a certain number of bars that they use the confirmation method with, and then they're out. Okay? That's fine. There's nothing wrong with that. We just give you standard benchmarks, standard things that have stood the test of time, and let you work with them. That's what will make you a consistent trader. Not having me tell you, no, you have to trade it this same exact way each and every time. That's a recipe for disaster. That's the way I was taught. That's the way most traders are taught. And that's why most traders fail. Our goal is to provide you with information and education to increase your odds for a successful trade. But remember, we're only trying to put the odds in your favor. There are no guarantees for winning trades using this one simple technique. All right, now for more information, for this, we're giving you the PTS Primo Charting Platform. We're giving you a free trial for only $7. This is a great, great offer. You're getting the platform with the confirmation entry technique already applied. You can contact Pro Trader Strategies and get that 30-day $7 offer. It's extremely simple. All you have to do is simply go to this link right here at the very bottom. Now, that link is not live. It is actually something you have to copy and paste onto your browser. But if you look on the chat box, we have posted a live link. So all you have to do is go to your chat box and you go to webinar column on the far right, and it will take you to the information page for the PTS Primo Charting Platform trial. That's a 30-day trial we're offering you for $7. Think of it, $7. You're probably going to spend more than that on lunch today. And most likely you spent more than that just trading yesterday with your commission costs. So $7, you're getting 30 years, or I should say 30 years, I'm shortcutting myself, 40 years of information and education that I've accumulated in 30 days. It's yours to experiment with. And included with that comes our confirmation method. So it's a great, great offer. I'm going to leave this information up here. If you have any questions concerning tech support or anything concerning maybe purchasing a strategy along with this, contact Pro Trader Strategies. I developed the platform with them. You can email them or call them directly, which is what I would probably suggest, because that way you can talk to someone. There's absolutely no obligation at area code 310-598-6677. Okay, we have some questions now. Let me answer these. Good morning. Someone is asking, what is a tick? Well, a tick is just a unit of measurement. So in other words, if you're trading a stock, let's say the stock trades at 50. Now it goes up by increments of a penny or a cent. So the next tick would be 50.01. The next tick after that would be 50.02, 50.03. Those are a cent. Now, if you're trading currency pairs, they don't call it a tick. It's called a pip. So each different currency pair has a different rate of a pip. So I would contact your broker for more information, but it's just a unit of measurement. It's the next unit of measurement you're going up or down in, okay? Charles is asking, are your entry decisions based on daily candles? Well, our entry decisions are based off of our strategies or methods. Those methods can be used in any market and any time frame. So we don't care if we're trading a daily bar, then yes, they're based off of where all the requirements were met on a daily candle. If we're trading a 5-minute bar, then our entry was based on where all the requirements were met on a 5-minute candle. So we don't look at different time frames. Once again, you're always free to do this. This is probably one of the most common things that traders are taught in the beginning is that, well, if you want to find out what to do on an intraday time frame, you have to find out what's happening on the higher time frame. So if you see that the daily time frame is negative, then you have to wait for the intraday smaller time frame to be negative, to be in line with each other. Well, if you feel you must trade that way, that's fine. But in my 41 years of trading, I have found absolutely no consistency in using that technique. None. In my opinion, it's just an urban myth. Okay, if you want to use it, that's fine. I don't use it. In other words, if I'm trading a 5-minute bar, that's the only thing I'm focusing on. I don't try to overcomplicate my trading by looking at different time frames. If I'm trading a 5-minute bar, I'm looking for all my requirements to be met on the 5-minute bar. I don't care what's happening on the daily or the weekly. It's a waste of time. And actually, it's been my experience that all that serves to do is keep me out of a lot of good trades. While I'm waiting for the two to line up, I miss a great setup because I'm waiting for them to be in sync. So once again, our philosophy is not to tell you how to trade. We don't believe in that. We're simply here to provide you with information. But if you want my opinion on that technique, I have found no consistency in that. So if I'm trading a weekly bar, my decision is made off of the requirements that were met on that weekly bar. That's it. If I'm trading a 5-minute bar or a daily bar, the requirements that were based off of that individual bar. We don't need to look at different time frames. Okay, I hope that answers your question. These are good questions, and trust me, I was taught these same things, okay? I was taught, when I first started trading, wait for the smaller time frame to be in line and be in sync with a higher one, and I thought, boy, that's my secret. I'll know these. And guess what? It didn't work. So, we're still being taught these things today where there's really no consistency behind it. Charles asks, how many strategies does your software cover? Well, we have a multitude. We have upwards of 8 different strategies. I would contact Pro Trader Strategies because there are different strategies for different needs and different types of traders. Some are momentum trades. Some are consolidation type strategies. Some are, we have one strategy that's specifically for stocks. We have other strategies, mainly the majority of our strategies are mainly fit everything. It's entirely up to you. I would talk to someone at Pro Trader Strategies. They can give you a better idea of everything. But we have strategies that roughly go up to 8 or even 9 different methods. And remember, it's not the software that is doing anything. You are learning that. So I don't want you to think that your question is, how many strategies does your software cover? I think the better way to ask that would be, how many strategies do you teach? Because we teach you what to look for. The software is just there as an educational tool, okay? So I don't want you to think that this is a system that the software is providing you with buy and sell arrows and that's all you have to do. No, the correct way to ask that would be, how many strategies does your company teach? Because we are an educational company and we're giving you different ways in which to apply these strategies. No two traders should ever trade alike. I know we've been taught that all we need to do is buy this master system and just take the signals it generates, and everyone across the world takes the same signals and we'll all be millionaires by next year. Well, it doesn't work that way. If it did, then everyone would be successful, but it's the opposite. Most traders fail in the first year of trading. In fact, probably less than that. The reason is because you're taking yourself out of the game. So you don't want to rely on how many strategies a software is generating. You want to rely on how well you can learn what a mentor is teaching you. Okay? Our software is just there as an educational tool to elevate your trading. We designed the platform to make trading simple for you, but we teach you everything first. Okay? We are first and foremost an educational company. These are great questions, and once again, I want to take all your questions. Please get the information you have here, though, for $7. 30 days for $7 is a great, great offer. You'll spend more than that today. Remember, just on a cup of coffee this morning. So we really want to provide you with sound fundamental education and then let you make a decision after 30 days if it works for you or not. You know, a lot of companies, they promise the world, and then as a offer, they'll say, for $500, you can have our platform or our system. You know, that's too much. We want to, get to know you. We want to show you in good faith that we're an educational firm first. So I think $7 is a good, inexpensive number for most of you to come on board, okay? Well, I think we're concluded. If there are no more questions, remember, if you do have questions after this presentation has concluded, please do not hesitate to either email or I would suggest calling Pro Trader Strategies, because they can answer questions, and plus they can answer software questions. They can answer, if you're interested in other strategies, they can fill you in with a lot more of that information, okay? I'm the educational portion of the company there, strictly tech support and pricing and platform issues. So there's no obligation. Feel free to contact them and call them with more questions. But remember, this is a great offer. We don't know how long this will last with this great feature of the confirmation method. So in closing, I hope you got something out of this today. I hope you got a little bit of education. As you can see, in good faith, we're simply trying to educate you, to enlighten you, and hopefully elevate your trading to the next level. So as you take one last look at our disclaimer, I really wish you the best of luck in trading, and I look forward to all of you becoming students of mine and members of the PTS Primo Charting Platform. Thank you so much. I'll see you next time. Bye-bye.